Hey, what's up everyone? This is Silver Slayer. I think it's safe to say we've been through one hell of a year, but things aren't settling down anytime soon. It's hard to predict exactly what will happen, or more importantly, when, but we do know one thing. Every scenario is bullish for silver. What are the consequences of all this overspending and our unlimited budget and the reckless decision making from our government? That's what we're about to dive into, the aftermath. Make sure you're subscribed if you want a chance to win over $1,000 worth of silver. I'm not kidding. Once we hit 40,000 subscribers, I'm doing a giveaway. So on that note, let's kick the intro and dive into this very interesting topic. So this video is going to be extremely important because as an investor, we look forwards. Not only do we look at the past and the present, what's happening currently, how that's affecting the markets, but we also look forwards. Investing is a lot different than gambling. Gambling, you just throw your money right then, right there, hope it sticks. Investors make strategic decisions. And this video is going to be a perfect example of that. So gold after the virus, Brexit, and President Trump. So as we enter 2021, gold bugs will need to factor in their analysis for the virus, Brexit, and the arrival of Joe Biden in the White House. Things are definitely going to change, and we're about to dive into how drastic this will be and also why it's going to affect the precious metals markets so much. So the amount of money required for the epic task of vaccinating the entire nations will be enormous, and that's necessitating a huge increase in fiat currencies. The advent of Brexit with a trade deal could see both the euro and the pound strengthen, putting downward pressure on the US dollar. Do not delay to take a position, even if it is a small one, in the gold market. Even a small one could make a big difference. Right now, silver's $27, but if you buy that 1 ounce, that could turn into $50 in your pocket. So think about buying, 10 ounces of silver. Yeah, it might cost, a couple $100, but that could easily turn into a couple thousand. So as we enter 2021, gold bugs will need to factor into their analysis the virus, Brexit, and the arrival of Joe Biden. These three factors will have an effect on our currencies, the world economy, and the markets in general, which we will outline below. Politicians and central bankers have to deal with these impacts. And as we can see, a slew of border controls, lockdowns, travel restrictions, virus testing, vaccine production, immunization procedures, and they're all being implemented. I mean, think about this, but also think about this from a different perspective. Miners. I mean, look at all the lockdowns, travel restrictions, border controls. Do you think there's going to be a lot of production? And not only that, but from the vaccine perspective as well. Things are going to get a lot worse, especially with this new mutated virus that spreads faster and stronger. People, especially around the entire world, are not going to get vaccinated to a complete, from a whole for a while. All these actions have a cost, and to cover the costs, a boost in generation of new money from thin air has been adopted by the Euro, the US, and UK, and others. These changes will eventually have ramifications for gold and the precious metals markets itself. This means more spending, overspending. We don't have this money to give out, but it has to come from somewhere. So when it comes out of thin air, we have to pump in, we have to create more dollars, weakening the dollar. The dollar's already extremely weak. It's already on its last leg. And when the dollar's low, gold and silver's high. So here's the virus. The virus, sadly, is still with us, and now all hopes are pinned on a vaccine to stop the spread of the virus. However, there is a massive cost associated with this virus in terms of research, regulatory approval, production, distribution, and application. This is one of the biggest logistical exercises that has ever been implemented. The amount of money required for such an epic task is either being borrowed or printed, and sooner or later will have to foot in the bill. And there's going to be, think about it. There's going to be a cost to pay. Cause and effect. We don't have that money to give out, but it has to come from somewhere. There's going to be a price to pay. Just like with stimulus. Everyone wants a quick $700 paycheck, but at what cost? People think the immediate, the short term, and forget about the long term, and that could be the one that's the most dangerous. Finally, after years of wrangling, the UK and Europe have agreed on and implemented an exit for the UK and the EU with the trade agreement of sorts. It will now be a different story going forward for both the pound and the euro, as the uncertainty that surrounded this issue for the last 4 years has been more or less eliminated give or take various details that need to be tidied up with the exist around fishing quotas, for instance. And by the way, before we dive into the meat and potatoes of this, which is talking about the new presidency after Trump, I also wanted to mention something else. See, a lot of people are betting on everything getting worse. I mean, you'll see some people that have hope for 2021, but we have to be realistic. And like these other articles, gold is still a bargain. They're talking about, the negative yielding debt near $18 trillion. There's a lot of things happening, and it's only going to push gold into, it's an impossible position to fail. Gold and silver are guaranteed to be up. And look, another article, continue to buy gold in weakness of 2021. It's a great hedge since December, beating equity markets. And as Democrats looking to control the White House, chances of more deficit spending are high. The dollar just hit a key support level. And this article is interesting. We'll dive into this at the end of the video because it also does bet against gold a little bit. It challenges it. And I like being a person that shows transparency. If there is going to be something that could hinder gold, I want to talk about it. I don't want to just give you guys what you want to hear. I'm going to give you guys what you need to hear. So anyways, I just want to give a glimpse of that, of why you need to continue on watching this video, because we're going to dive into some more topics that are just as important, just as relevant. So here's the new presidency. In the U.S., we have a change in the presidency with with Donald Trump being replaced by Joe Biden. It can be said that Donald Trump's presidency was certainly a big spender, right? Donald Trump was a big spender, but Joe Biden is a more extreme version. Joe Biden has made a number of electoral promises that will indeed require an awful lot of financing. So the deficit will not only remain large, but will indeed accelerate. The already large debt pile will grow, and this is also detrimental to the dollar, and the dollar is diluted every time we create more of them from thin air. Once again, hard assets will be the beneficiary, such as land, property, fine art, classic cars, along with gold and silver. So here's the conclusion. We can only conclude that the above-mentioned changes impact on the economic and political landscape, resulting in generation of more and more fiat currency for financing requirements. Dollar index low, gold and silver high. It's that simple. My preferred hard asset is gold and silver, and to that we acquired both physical metals some time ago. Most people are going to be buying silver at $50+. We buy it at half of that, right? That's why we get in before the curve. So take a quick look at the chart for gold below. We can see that it had a reasonably good 2020. However, it is still volatile, and I expect that volatility will continue throughout 2021 as it reaches our target of $3,000 an ounce. As I said before, you cannot expect stable prices because the economy isn't stable. A lot of uncertainty itself from people, from the investors, still trying to get a grip on when things are going to settle down. It's going to be a roller coaster ride. That's a lot of opportunity, especially with silver since it's more volatile, but that's also more dangerous, definitely more dangerous. So let's take a look at the other thing I was talking about. So obviously I'll post this link in the description as well. It's talking about years of consolidation. It's 2011 nominal high where silver didn't even hit around half of that. But here's what I wanted to talk about. So why caution? Gold had a great 2020 and the dollar is at a support level. So this is what I was talking about, the other side of things. But I will wrap it up. It's going to come full circle. To begin, I want to touch on a couple of points that make me a little cautious about gold. While I believe in the play long term, I noted above that I believe investors would be wise to be selective on when they buy in. And that's the key thing about this whole article. It's key to, that's why I also say you have to be subscribed. You cannot just buy gold and silver whenever you choose and expect to make the maximum amount of profits. If you're just buying gold and silver, randomly when you feel like it, you cannot expect to be as successful as someone who watches my videos. So, this is because I see some headwinds as well, so I continue to expect plenty of volatility. Under this premise, waiting for drops to buy makes a lot of sense, and I believe there will be plenty of drops ahead. So to understand why, let's look at a couple of key points. One, the value of the dollar has fallen dramatically in 2020, driven by mainly massive stimulus spending. While there is plenty of validity to this drop, and it is worth pointing out that the dollar has just hit a multi-year low shown below. My point is that we seem to have reached a key support level for the dollar. To me, this indicates a short-term bump may be on the way. And that's just like with any other market. With gold and the dollar often trading inversely, this could limit gains in the immediate future. If the dollar goes strengthened, and that's whether it's less stimulus than expected or an expectation of higher interest rates, that will pressure gold. But that is temporary. That will not last. That's when there's going to be a lot of panic selling, a lot of people that are skeptical, especially if there's a lot of new investors into the precious metals, a lot of weak hands. People might start freaking out. But that's only an opportunity in the beginning of the year to get some cheaper precious metals one last time. And remember, this is theoretical. That's not even mentioning that this will happen for sure. I mean, since Joe Biden's in office, like we talked about, there could be a lot of worst case scenarios happening. So then why consider gold? Stimulus and debt levels. See, in the paragraph above, I highlighted a couple reasons why, or to caution gold. But with that in mind, why will I be adding it to my position this year? To answer that, I'll explain that I believe tailwinds for gold are stronger than those aforementioned the headwinds. Specifically, I see two main reasons why gold will rise in value this year: debt levels and stimulus. Starting with debt levels, it should not surprise investors that the U.S. government is heavily indebted. National debt is at astronomical levels, $27 trillion. So expanding on this point, let us consider the interest rates for a minute. If an economic recovery takes hold, rates could tick higher, limiting the ability of gold to appreciate. In nominal times or normal times, I would take this risk quite seriously. 2021, I do not see it as very realistic. We have to be realistic. So, and this is even the best point. The reason being is that the government simply cannot afford to see rates go higher anytime soon. In fact, the U.S. has a tremendous amount of debt coming due to this year, as seen below. And here's a chart, 2021's biggest debt maturity. The U.S. by far. We're talking about around 8 billion. I mean, even higher. The point, or 800 billion. I mean, the point is that the Fed has a massive 7.7 billion incentive to keep rates low. Of course, government could get spending under control, which would allow interest rates to increase, having such a negative impact. But that will not be happening in 2021. And there's also alternatives. There's Bitcoin, right? A lot of people, Bitcoin's at what? 40,000? Bitcoin's at $40,000 now. One Bitcoin at $40,000. Right? I started buying Bitcoin at $1,800. It's at $40,000. A lot of people called me crazy for buying it that low. They thought I was way too high, right? A lot of people thought I was crazy, that I was in the wrong, that I shouldn't be pushing that. When it was at 1,800, now it's at 40,000, right? You got to think realistically. That was back in 2017. And then it hit 18,000 and people were selling, or some people were still buying. And the people that bought at 18,000 probably sold lower because 18,000 was the top before it crashed. And they sold it around 10,000 and they lost $8,000, but now they could have made almost double that as it's on the way to 50,000. So you see how when you buy and when you sell is dependent upon how much profit you take? You see how you cannot have a weak stomach, how you can't invest emotionally, how you have to look at the bigger picture? Because that's a prime example. A lot of people bought Bitcoin at $18,000 when it was at its glory. Everyone was talking about it. Then it shot down. People gave up on it and sold with massive, deficit. They lost a lot of money. If they would have held on, had faith, it would have, their money would have not only broke even, but now they would be up a lot in the green. So, the point is to be a contrarian. As investors branch out in search of value beyond equities, it appears they have found renewed love for Bitcoin and at gold's expense. Given Bitcoin's volatility, uncertain regulatory environment, and its unclear future, more of a temporary play. And that's exactly what I was talking about. Use the profits from Bitcoin to reinvest into precious metals. Or you can invest in GSX. It stands for gold secured currency. That's what I'm talking about lately. It's a great coin. It's a great coin. It's a crypto that's backed by gold. It pays yearly dividends. It's great. If you want to check it out, the link to it to buy it is in the description. You actually get a 5% bonus as well. That is the future. Apollo FinTech, one of the most respected companies, is owning it. It's ran from. They actually have 4 gold mining sites. I might actually go visit one of their mining sites. Not even kidding. This is the most innovative company I've ever heard of. They actually have staking now too. If you stake for 1 year, your portfolio goes up 10%. 2 years, 20, 3 years, 30. I mean, this stuff is, it's so innovative. It's so incredible. And I'm so glad that I found this company, because I'm going all in. And I already have 100,000 tokens. They're 10 cents a piece. So do the math. I'm heavily invested, and I'm going to make a pretty penny off this. So anyways, that's besides the point for this video. The point is this: the aftermath is going to have a lot of serious consequence, and people need to be careful. Do not, in the immediate term, be investing. I always say invest with your head, not your heart. And unfortunately, as people a lot of new investors throw money that they don't have, just trying to gamble, they are going to get bit. So hopefully people that watch my channel understand the risks. They understand how to invest, and they understand the difference between investing and gambling. I'm going to wrap this video up here. If you want to check out the links to these articles, will be in the description. Make sure you subscribe if you want a chance to win $1,000 plus worth of silver. That's not the reason, though. If you're subscribed, I guarantee you will make a lot more than $1,000 worth of silver from watching my videos on a daily basis, because I'll keep you in the loop. Thanks for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.